The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks, and I'm going to start the show with a little bit of a history, recap of history. We're going to go back. Actually, what happened, I got a phone call from one of the folks that listens to our show here at TFNN, and believe me, the number of times I get a phone call, I get some emails, of course, but a phone call is almost unheard of. So I did get a phone call, and the person was very concerned about what was going on with Amazon, because he couldn't understand it technically and he had never seen anything like this before. And I gave him a little bit of a hint to go back and look at something. And so what we're going to do here is we're going to take a look. We're going to take a look here at the price of Qualcomm going back to 1999. I'm going to tell you a little bedtime story here. Here in Tucson, Arizona, we have 3 of the 5 best spas in the United States, we're told, and one of them happens to be at Canyon Ranch, which is about 2 miles from where we live. It's about a mile from where Arch Crawford lives, and Arch happens to know the owner of that place, Mort Zuckerman, and I was able to meet Mort many years ago. He's a really nice fellow. And what happened was I had been doing some work with Bear Stearns, one of the big brokers at Bear Stearns. I got him into this business 25 years ago when he was just getting out of UCLA School of Business. And he ended up being about the number 3 broker in all of Bear Stearns' company. He lost about $10 million when Bear Stearns took the hit, but you know, he's bounced back really well. He's a professional money manager now, and he doesn't make any decisions. He hires people to do it. Well, anyway, he went to school with someone in London who was a friend of one of the sheiks over in Abu Dhabi. And what happened was they wanted to come here to Canyon Ranch, and they wanted to have a Rolls Royce to drive around for a few weeks. And there's no Rolls Royce dealerships here in town. There's one up in Phoenix, but there's not one here. And so they asked me if I would check around to see if they could get a Rolls Royce for a month. And so I called the Rolls Royce place, and they said no, they didn't do anything like that. Well, one thing led to another. They ended up buying a Rolls Royce, and then they kept it in storage here for about 5 years. I traded their account. They gave me a $5 million account to trade, just out of friendship to Jeff. Jeff Asoff was the guy's name. And anyway, I had been trading that account from 1997 through 2003 when he finally passed away. And then the kids put all their money into art and London real estate, and they've done very well, as you can imagine. But let me get to the story of Qualcomm. Qualcomm is remember, this is the weekend of Christmas Eve, 1999. And I had a very good year. I'd been short gold, had a couple of really good soybean trades, and a few other little things that I trade. And I had been basically pretty strong on the market up until about Thanksgiving time, when I said, well, I don't know how much higher it's going to go from here, but the long side's not for me. But I was still trading, and in Qualcomm, it was one of the hottest stocks going. It was really, and I was interested in that because my friend over in San Diego's Gardner had worked for the Gardner for the owner of Qualcomm, and he was telling him how he bought this stock all the time, and you know, all this stuff. So anyway, I was following the stock, and I had a beautiful 3 drive to a top pattern on an hourly chart in Qualcomm. And remember, this was 1999, so they were still trading in fractions. They were not trading in decimals. So it was quarter half, quarter half, quarter half, you know, so it was pretty actively traded. Well, anyway, I had sold the stock at about, I don't remember the exact price. It was in the 590s, 595, 593, 597. I don't remember the exact one. I wish I would have kept the chart and everything, but I didn't. And anyway, I had sold the stock, and then the following Monday morning, I was right after the first of the year. There was a young man named Walter Pychek of Thompson McKinnon, who was, I believe, 22 years old, and he was one of the analysts for Qualcomm, and he gave it a price tag of $1,000 a share, and I'm short at 590, and the stock is due to be about $100 a share higher. I mean, that's what we had with Amazon. This is why I want to give you the story here. So anyway, I'm saying, oh boy, I've got 500 shares short. I'm looking at a $50,000 loss, and that's going to be about a 5% hit, which I didn't want to take, but I was way up on the year. So I called Jeff, and I told him, I said, look, I got a problem, and he hung up on me. And because I told him what happened, and he hung up. I said, why'd you hang up on me? He said, that's not a problem. He said, that's nothing. He said, that's peanuts. He said, forget about it. How are you going to handle it? And I said, well, I'm going to wait, the first 20 minutes, and if it's up above, $100 a share, I'm just going to blow it out and take the loss. He said, fair enough. Okay, the stock had a split opening. It opened closed at 592, as I recall. It had a split opening between 683 and 726, but I never saw a print at 726. Everything was in the lower end of that range, and in the matter of the first 15 or 20 minutes, the stock was only up about $60. In the end of the day, it was down on the day, and it ended up dropping. As you can see here on this chart that we have for Qualcomm, it is basically a vertical line going up. It's running at about 82% slope on the line. And as you can see, it had the big break, and then after the break, a few months later, it had a perfect Gartley pattern at the 61% retracement, and then came down. So what I wanted to do now is to give you an example. We're seeing the same thing again. There's nothing new under the sun. There really isn't. And what we're looking at now here is we're looking at the same thing here in what's its name, Amazon. Bezos is going to make another $7 billion today, folks. Can you believe $7 billion, how much money that is? A person can eat out 2 or 3 times a week if they make that kind of money. $7 billion. We thought that Google was big the other day when the two boys each made $4 billion each, and so we'll see what happens. Anyway, this is how moves end. They don't start this way. I don't know what the news is going to do to bring this thing back into reality, but reality's coming. These things don't change. There's nothing new under the sun. So just be careful. Frankly, if Amazon wasn't up and Starbucks wasn't up, I would imagine the rest of the market would be down, because the rest of the market is down. All you have to do is look at the New York Stock Exchange Index. If you want to see a really bullish chart, folks, here, let me pull one up for you. You'll see bullish here. This is really good. This is the New York Stock Exchange. This is really bullish here. Look at this. You've got a stock that's been going down since May 19th, and with lower lows, lower highs. This is what they call in technical trade a downtrend. I know the NASDAQ has been in an uptrend, but the rest of this market is not. Folks, there's a big problem out there, and it's not with stocks. It's what's happening to commodities. Somebody's not buying the materials to build products, and they're not shipping these products. All you have to do to prove that to yourself is to look at the Dow Jones Transportation Index, and you'll see that that's exactly what's been happening. What did we do yesterday? We went right up to that trend line that had been going down, that parallel channel line that we've been looking at here for several weeks. We went right up to it, and down she came. I know the airlines are filled, because whenever Sarah and I travel, it's always crowded. And the problem is, why aren't the airline stocks going up? They've got a perfect storm with oil going down. Folks, look at the prices of the copper. I have to show you this price of copper, because this is real serious now. But we have some hope in the copper market. Just give me 1 second here I have so many things that I wanted to show you that I probably didn't get them all up here, so who knows? Oh, dear. I can't find it. Doggone it. I thought I had it in here. What did I do with it? Oh, well. Old age catching up with me a little too faster than I had hoped, but we'll see. Oh, dear. What had happened? I knew I had copper in here. I even got it on the first thing on my list to talk about. All right. Anyway, copper is making 6-year lows. This is not a good sign either. So it's telling you that there's something certainly not right. But with that transportation index going down, utility index going down, stocks are going down. That's the bottom line, what it looks like to me. Now, folks, let's play the devil's advocate here. We know that most of this money here is people that are playing with no skin in the game. They work for Fidelity or Blackstone or Blackfish or Blacklist or whatever those companies are called. But anyway, if this market would close weaker today, maybe because of Amazon or whatever, who knows? Maybe it's, that's stupid. I was going to say maybe it's even bad reporting. I don't know. But when a stock opens up $90, like we did with the fact that the move in Amazon is far bigger than the move in Google, because Google was a $500 stock open at $6. This was a $400 stock open at $500. So it was a 20% move, which is even really big. So anyway, we have the price of copper is making 6-year lows. Now, we know that all the metals, the miners and all that stuff is heading into the sewer. And one thing I've remembered through all these years of doing this stuff is that one thing you don't want to do is not try to follow the herd too much. And we got too many people on the short side of gold and silver. Now, I know it's really bearish, but we could see one heck of a short covering rally here in gold. I'm talking, $100, $150 without even bouncing. That's that could be it. So we'll see. Anyway, this is what I'm looking at here. On cycle-wise, we've got a pretty big cycle coming over the weekend, but the big one comes in next Thursday on the 30th of July. That's going to be a really big cycle. My assumption is that's probably going to be a cycle low. So we'll take a look at this. Okay, we got our first caller here from California, our good friend Brent. How are you, Brent?
Good morning to you, Larry. How are you?
Good. Listen, we're probably going to go into the break area, so stay with me till after the break, but fire away. What can I do for you?
Yes, I had a couple questions. The main one was about IBD, but I wanted to ask you, I've been around the markets not as long as you have, but what was the situation back in the dot-com bubble? We're having similar action in Google and Amazon, but at the same time, you have stocks and the commodities just absolutely getting decimated. Was that the situation back then, or was it?
No, back then, commodities were a lot lower than they are now, because that was 15 years ago. But the dot-com bubble was a once in a generation. We won't see that again. You'll see it probably late in your life, but you'll only see something like that about once every 80 years. I mean, these stocks didn't even have earnings. They didn't even have sales, and they would double or triple overnight. But that all ended, in March of 2000. So who knows what that's going to happen. We have stay with us, Brent. We got this break coming. I've got to pay a few bills, but stay with us, please.
Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with Brent from California. And Brent, we were talking about the difference between the dot-com bubble and where we are right now. And it was a huge difference between where we are now and where we were then, because some of those companies didn't have any sales, but it was really crazy. I will tell you a story here that one of my friends when I was at Drexel was a broker, and Barry had gone through a really bad divorce. His wife became involved with a religious cult in some foreign country. I forget what it was. And so she left him and his children, and his children were grown, of course, so he didn't have to worry too much about that. So what he did was they split their holdings, whatever they had, and he kept the stock portfolio, and she got the house. And he went on a sabbatical to the Amazon. Oh, that's strange that that's where he went, but he always wanted to go there. And he was a pharmacist before he was a stockbroker. He was a little older than me at the time, but he went away for 2 years. He literally had no contact with his family or anything for 2 years, and all he had in his portfolio were a couple of stocks. One of them happened to be Dell. And when he finally got out of the Amazon, he told me this story a little later, of course, but he called. He had his account at Bear Stearns because he happened to be a friend of this other guy that we know, and he said that he got the quote on Dell, and the stock was quite a bit higher than where he had bought it, and so he was doing well, and so he felt pretty good about that. What the broker forgot to tell him was the stock had split 3 times. and he had like 9 times the amount of money that he thought he had. That's how crazy it was back in 2000. But it's crazy here, but not as crazy as before.
No, I remember that well. There was actually a stock called Interdigital Communication. I think it's still a trading company. Mm-hmm. And it happened to be similar to talking about Qualcomm. It had a similar, business. And so obviously anything that was at all related to any of those stocks, they would just go crazy. And I told both my brothers to buy 1,000 shares of the thing. And at the time it was $10. And then within, probably a week or two of, I sold mine as it started going up. I was out of my position. Theirs went up to like 150 a share, whatever the heck it was, and I think they sold some of it, but of course they didn't get out of as much as they should have, and it came all the way back down, like everything did. And
well, there were some scams then, too. We had Global Crossing, if you remember. One of the Milken lieutenants was involved with that. I can't remember Gary's last name, but I can't remember. But anyway, that was just a total scam. But those happen all the time. That people are just just not very honest, and that's how they get by. But this is it's not any different. It's just not as bad as it was in 2000, is my opinion.
Oh yeah, it just seems interesting that you have some stocks just going absolutely nuts, and then the commodity section has just been absolutely hammered. So you have a big divergence between the two. My question was about IBB. I have options on it that are short. Mm-hmm. And I've noticed the last few days where it'll gap down. Mm-hmm. And that's kind of the low of the day, and then they seem to bring it back. I'm considering, I know that Biogen is down a bunch this morning, like $50, and that's a pretty big weighting in IBB, so it's going to gap down. I'm thinking about peeling off some of my position to at least I can get myself free in the trade, and
getting free in your trade is always a good idea. But the IBB has made all the targets that we look for, and it's acting a little weaker than especially everything's acting weaker than Amazon. But to peel some off was not a bad idea.
I think I'll do that. I just and I think it will go lower. I just that's kind of been the way the price action here lately. It'll make the move initially as it opens, and they seem to kind of bring it back throughout the day. So. And
not only that, Brent, if it just falls out of bed and goes down $100 today or something, you can always blame it on me. That way you won't have to take any responsibility. How's that?
Like Obama? Okay, sure. All right, Larry,
these commodity prices, boy, you talk about them circling the wagons. Boy, they've really had some problems over in these markets. That's for sure.
Actually, the one thing I wanted to do is I don't know I'm going to get a chance to call you on your birthday. I know it's coming up, I think, on the 28th. So.
Oh, thanks for bringing that up. Actually, I don't have birthdays anymore, Brent. I give them to people that are 20 years old so they can start drinking a year early.
Not a bad idea.
Yeah. Well, thank you anyway. So listen, tell Leanne I said hello, and thank you for calling in.
Oh, you take care, Larry. All the best to your family. Take care.
Okay. All right, we'll take a few breaks here. We'll come back, and we want to talk about some stock market bubbles in the past, and then we'll also talk about some commodities.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to switch over. Well, first of all, someone asked a question about bubbles and how often do they occur over a 20-year period. Well, bubbles usually are once in a generation, and a generation is 80 years. We had one, remember 1929, you add 80 to that. That takes you to, 2009. And we certainly had something around 2000, which is close enough. But we're in the middle, we're halfway through that, so I don't really know. The thing is, we've got this monster 1, 2, 3, 4, 5 expanding triangle in the stock market that we've looked at many times. That's the real tough, real tough area to see what's going to happen. The market is under. I mean, I just can't understand why people can even thinking about buying a stock here with the trends turning down and the fact that the the commodity prices are, going into the sewer. Now I'm going to show you a weekly chart here on the JP Morgan. Looks really interesting here because we've just completed the ABCD. Yesterday's high was within 4 cents of the exact ABCD at 70.31. We hit 70.26 was the ABCD, so that's an interesting one to look at. And then if we take into account, that's part of the banking index. We'll take a look at the banking index, and you'll see that on the long-term weekly chart on the banking index, we hit the exact 61% retracement to the exact tick. We're now down $2 a share from the exact 618, but that's telling us that that probably is fitting in pretty well too. So these are the stocks that have been, running the market, the biotechs and the banking stocks, and they're hitting these major spots. Whether that means anything or not, I don't know. All I know is nobody else does either. So it's just by guess and by God, and we'll see what happens. But that's the appearance of what it looks like. Is we've hit something pretty stiff resistance this week with the fact that the New York Stock Exchange Index is coming down so much. Let's take a quick look here at with Amazon. Wow. Okay. Well, this is interesting now. Hold on. I got to show you something here. We might have a I made an alert about this yesterday, but I didn't think it would happen. Hold on just a second. No, it didn't quite happen. Doggone it. I was looking for a potential island reversal in Google, but it didn't. It opened basically unchanged today. Let me put this in here to show you what's happening. And you'll see that we opened down, so we opened actually unchanged and then came down. I wanted it to gap down below 641, and we didn't do that, so nothing's really significant about that. Now, remember when Google moved up from July. Here's something else that's really funny, folks. Look at the price action from July the 10th to where we are when we made the top, from the 10th. All the way up into the 22nd, those 12 days. Look at all that buying and then the huge gap. I wonder if the SEC is going to look at if there was any unusual buying in calls. I just wonder if they'll do that. Probably not, but that's just my guess. So we'll wait and see. Now I want to take a look and see how Amazon is trading this morning. This is for my own personal use because I like to see these really wild ones when they start opening. So we'll see. Well, it's already come off 40 bucks. Well, that's not so bad. Okay, let's just take a look at it here. Well, let me see. It's only come off, 91 to 60. Only $30. It's come down from the high so far in the Amazon, but it's still a little early in the day, so we'll just have to wait and see. Folks, I'm going to have to share something with you here. I'm probably going to be blowing smoke out everybody's ears, but I've been doing this a long time, and I've been there and done that and made a lot and lost a lot, but I've been on top of these things when they've came down really hard. And boy, there's something really wrong. I don't know where it is. It might be China, it might be here, it might be quantitative easing, but these markets are rolling over, and they are rolling over quickly. They are rolling over quickly. Look at stocks like Minnesota Mining, one of the best stocks in the whole world. I mean, it looks horrible. Caterpillar, not as good as Minnesota Mining. I mean, Minnesota Mining is Scotch tape and Post-its and all the other stuff that they make. It's a fantastic company. And my aunt was in that stock for 60 years and made a lot of money with it. But, it's getting hit right now. But these markets are rolling over. And the problem is the fact that nobody in the whole world is even worried about it. That's what scares me the most. I mean, I would expect the VIX index to be trading somewhere up around, 19 or 20, given what we have going on right now. But there's nothing there. And that's a bad sign. And this is reminiscence of what happened in October of 1987. And I think this is what we're looking at right now. I think you're going to see something really dramatic. I don't know where it's going to come from, but I believe you're going to see something really, really scary here from now, the 24th of July, through the end of August. Those next 5 weeks, I think we're going to see some really, really big action. And if we make new highs, I'll be working at the McDonald's right off of Sunrise and Swan here in Tucson, because it's the only place where they'll hire anybody that is septuagenarian. So what are you going to do? Okay, another question that we have is about the gold market. Is there any hope for gold? I still think there's hope for gold, and the reason why I think there's some hope for gold, even though it's slim, and the hope will only be a short covering rally in both probably gold and silver, but you've got everybody bearish gold now, and that's not a good sign for someone that's bearish, because you got everybody on one side of the market, and as we know, these markets can rally quite a bit. So I'm going to be nibbling at the possible long side of gold here over the next, not this weekend, but maybe over the weekend. I want to be looking at it, but it'll just be a bounce. And I've been bearish gold for quite a while, and especially from the 1232 area. We made that 61% retracement, as Mr. Z pointed out to us at that time. He was screaming, yelling and screaming, and that silver was 18 and gold was 1232, and you can see where the prices are now. We got silver, below trading at 1440, and gold trading at 1082, and it doesn't look like there's any hope. I mean, all the commodity prices are going down. My whole, maybe I'm wrong. I'm not an MIT or a Harvard guy. I'm from Indiana, but we had a good school there, and the economics says that if prices are going down and transportation is going down, something's wrong. If someone can tell me where I'm wrong there, I really would like to know that. But why aren't the products being shipped, and why aren't they buying stuff to replace the products that they're supposed to be taking a look at it? You know what I mean? So this is the main thing that we're watching. So we want to take a look at this. We've had a request from our good friend Mr. Z in Philly, and we're going to put up a long-term weekly chart here on gold, which I was planning on doing anyway. But he helps me plan it, so let's just do even longer than that. We will, oh dear, this is looking really interesting here. Let's just pull it out so we can go all the way back to the, see, we're below the 50% retracement of the low from 2000, which is, we're not much below. We're only $9 below it, so on a technical basis, that's not very much at all. But as you can see, we made our high in September at 1932 an ounce, and now we're more than $1,000 an ounce. No, we're $800 and some dollars an ounce under that. So we are still 900. Yeah, we are. Yeah, it's quite a bit. Yeah, almost $1,000 an ounce that we've dropped in quite a bit. So we'll see. Now remember, if we go back and look at this. This is to give you an example of what we're looking with some of these markets. Let me just go back here and show you the bear market that we had during 1980 to 1982. You'll see that even after the market topped on January 20th of 1980 at 865, I believe was the high tick, and then the market broke down and then rallied up to a 61% retracement in October of that year, then made a beautiful ABCD pattern, perfect to the downside at $300 an ounce, and then it rallied from $300 an ounce to $528 an ounce. So it rallied $24,000 over the next 8 or 9 months, given the fact that it was still a very, very bearish market. And now we've got the same situation occurring where you've got everybody bearish, and that's going to be hard to continue that, because you're not going to have enough bulls or not enough people bearish to keep selling it. That's my guess, unless it's people that are long gold that are going to sell it out. I can tell you from personal experience, folks, people that own gold, the only time they sell it is when they have to eat. Or for some other vice, because gold is something that it's a personal thing, and if you like it, you hold on to it just because of the beauty of the coins or whatever it happens to be. But that's just my opinion of what's happening now. Last night we did have an interesting pattern happening. We had a really nice butterfly pattern form. On just the short-term basis here, as you'll see, I'll put this in here, stopped exactly at the 1.27, at 1070 a pound. How about 1070 an ounce? So we'll see, and we'll see. Now, I have someone ask a question about manipulation. Unfortunately, I can't buy into that. I'm a free market person. I believe if people try to do that, they're going to get their head handed to them over a period of time. And frankly, I just don't believe in the manipulation part. There might be some of it a little bit, but you can't manipulate markets as big as silver and gold because of the global scenario that you have with these products. They're so heavily used everywhere. So I don't believe that is going to be the case. Now, I wanted to quickly talk a little bit about the Australian market because it's related to the price of commodities by quite a bit. And I want to put up here a long-term weekly chart here in the Australian dollar, which is very, very closely tied to the commodity markets. So we'll see what we've got here. We've got a call from Bob in Maryland. Bob, are you there?
Yes, I am, Larry. Good morning.
Go ahead. What can I help you with, my friend?
Just more of a reminder, kind of a comment. Yes, I sense your frustration about the VIX index. I believe it's pretty inaccurate. However, I sent you an email about 6 months ago regarding a better index, which is the Money CNN Fear Greed Index. The Fear Greed Index has 7 components to it, one of which is the VIX. The VIX right now, according to the CNN Money Fear Greed Index, has a neutral reading, but the other components, the put call options, is in the fear category. The junk bond demand is extreme fear. Safe haven demand is extreme fear. Stock breadth is extreme fear. Market momentum is rated extreme fear. Stock price is extreme. So everything is pointing to extreme fear with the exception of the VIX. So 6 of the 7 components are in the red. And I just think everybody follows the VIX. I know Basil does closely. It's not my favorite gauge of fear and greed in the marketplace. So just,
Bob, is that the VXX? Is that the one you're talking about?
VIX, it's a
That's the
50-day
VIX,
moving
and then
average.
the VXX is the one you were describing.
Yes.
Okay, I'll take a look at that. Frankly, I had not looked at that before, so I don't, I'm not sure how that works, so we'll have to wait and see, but I will look at it. But I remember your email, and you were absolutely right, so I commend you for that.
Well, hopefully it's a nice tool that'll help out the listeners, and just wanted to throw it out there for everybody's digestion.
Well, thank you very much. I certainly appreciate it. And anything else? Anything else you needed to ask?
No, I just need a couple of shares to the Brooklyn Bridge, and I'll be good forever.
I've only got 2 left, Bob. So you're going to have to hurry, and it's going to have to be a cash deal. Okay, thanks a lot for calling in. I certainly appreciate it. We got another caller from Maryland. Sue, are you there?
Yeah, good morning. Thank you so much for taking my call. Yeah,
Not
about
a problem.
The silver. Yeah, I heard you say something about gold going to be bound sometime, but how about silver? Can you look at the silver too?
Yeah, well, silver still hasn't taken out the low of 1410. I expect it'll do that in the next couple of days. But frankly, I mentioned to you the other day, you're underwater big time.
Yes.
And so about the only thing you can do is, if you don't need the money, is just hang in there, because I think you'll get a bounce here, but I don't think it'll get a bounce enough to get you out of the black.
Okay, then wait for the bounce then.
Yeah, wait for the bounce.
Okay, I appreciate it so much. Thank you so much.
Thanks for calling in, folks.
Thank you.
Okay, thank you, Sue.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Put a chart up here, one of my favorite stocks, Triple M, Minnesota Mining Manufacturing, the makers of Post-its and Scotch tape and a whole bunch of other stuff. Anyway, as you can see here, we're trading at $49.88 and about $3 lower, $3.50 lower at $46, $146. We're going to have a 61% retracement and a whole bunch of patterns coming together. So if you're interested in buying something, this would be something to take a look at. Now, we left a big gap down yesterday. We're actually up a little bit on the day with probably a little short covering, whatever that happens to be. But we still have a target here of 146 on this, which I think will probably be hit in the next 7 to 10 days. would be my guess. There'll be a lot of resistance up at the 154 level where market broke down from, but that's still a little bit early in the day to look at it. So remember, we have a really strong cycle date coming in here on July 30th to right on July 30th. It's plus or minus 1 day, of course. So we're really close to something pretty significant happening. I noticed that we made a slightly lower low in the S&P than yesterday. We got down below the 191. We made a lower low by a quarter of a cent. A half a cent, which is very, very small so far, but that's it. We still have gold and silver heading lower. I expect the silver to get below 1410 during this move, especially on a Friday in a down week. There's nobody that wants to be buying that stuff. So that's the key thing. I think the main thing to watch is how stocks close today. If they close very poorly, below 2090, in the S&P, I certainly wouldn't want to be long, because I believe we could challenge those July 7th lows very quickly, and that was down around 2040. So that's just the way I'm looking at it from a longer-term perspective. So that's what it looks like. We got crude oil is still breaking down. I think we're going to $46 a barrel in crude. It doesn't look anything too bad. Don't forget, you have I have a webinar Monday about what I think is going to happen over the next month, and it's a free thing. So contact TFNN and live every day in an attitude of gratitude.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.